Welcome to The Explainer. All right, today we're jumping into a topic that gets everyone talking, Bitcoin. We've all heard the stories, right? Is this the future of finance, a total game-changing revolution, or is it just a massive, complicated risk? That's the paradox we're going to unpack. So let's cut through all the noise, all the hype you see online. We're going to get to the bottom of the really big question. What is Bitcoin, really? Is it the money of tomorrow, or is it just a bubble that's waiting to pop? You know, for a lot of people, the first question that comes to mind is, can you even trust this thing? I mean, with the crazy price swings and a creator who's totally anonymous, you have to wonder if it's all just some super sophisticated scheme. But its biggest fans argue there are some really fundamental things that make it different. And look, on paper, this all sounds pretty amazing, right? No central bank can just print more and devalue your savings. There is a hard cap on the supply, only 21 million ever, and everything's out in the open. Every single transaction is recorded on this public ledger called the blockchain. The whole point was to build a system where you don't have to trust any one person or company. But, and this is a big but, when you look at how it actually works in the real world, the picture gets a whole lot messier. Okay, so if we agree it's not a classic scam, then what is it? The original idea, the whole dream, was for Bitcoin to be a new kind of digital money you could use every day. But yeah, that's not really how things turned out. And this slide just lays it bare. The gap between the dream and the reality is huge. For a currency to actually work, it has to be pretty stable. You can't have your $5 for a coffee being worth $10 tomorrow or $2 the next day. It just doesn't work. Throw in the fact that transactions can be slow and expensive, plus the nightmare of figuring out taxes, and it becomes obvious why nobody's really buying their groceries with Bitcoin. So the story had to change. And this is the news story, digital gold. It's a pretty clever metaphor, actually. The idea is that Bitcoin is like gold because it's rare. You can't just make more of it. It's also durable, in a digital way, and you can send it anywhere. So the argument became, hey, don't think of it as money for coffee. Think of it as a place to store your wealth over the long term because it's so scarce. Okay, but let's run with that digital gold idea for a minute. Even if we accept it, the way this gold is distributed uncovers a massive, massive problem that people don't talk about enough. Just look at this chart. It pretty much says it all. The whole selling point is that Bitcoin is decentralized, a financial system for everyone. But the wealth is incredibly centralized. The top 2% of accounts hold 95% of all the Bitcoin. That's insane. So what does that actually mean? It means you have these giant players, people call them whales, who hold so much Bitcoin that they can potentially move the entire market just by buying or selling. It completely undermines that whole idea of a fair, democratic, decentralized system. And this concentration, this hype, it all starts to sound a little familiar, doesn't it? It leads to a big historical question. Is this whole thing just a modern version of the Dutch tulip mania from the 1600s, a giant speculative bubble? And here's where we get to some really tricky circular logic. Think about it. Bitcoin is valuable because it's worth a lot of dollars. People aren't buying it to use it as Bitcoin. They're almost all buying it because they hope to sell it later for more dollars. Its entire value is based on the idea that you can get out of it and back into traditional money. The psychology driving this is a textbook case of a bubble. You've got the greater fool theory. I'll buy this because I think I can find a greater fool to buy it from me at a higher price. You have insane FOMO, or fear of missing out, pushing prices up. And then you have this hodl culture, which means hold on for dear life, that tells people never to sell, which really just helps the earliest investors who bought in for pennies. Okay, finally, let's pop the hood and look at the actual mechanics. Forget the price for a second. How does this single Bitcoin transaction even work? Because when we dig in, we find this hidden and honestly pretty shocking cost. So in a nutshell, it's a very secure process. You sign off on a payment, it gets sent out to the whole network, and then people called miners compete to add it to the public ledger. But that third step, step 3, the mining and the mathematical problem, that's where things get really, really weird. This is maybe the most important question in this whole explainer. What is this so-called mathematical problem? What are these millions of powerful computers all over the world actually doing 24/7? And the honest answer is, it's kind of absurd. They're not curing diseases or modeling climate change. They are playing a guessing game. That's it. It's an intentionally difficult, totally useless puzzle. Computers are just guessing trillions of numbers a second, hoping to be the first to find one that fits a random target. It's like paying someone to dig a giant hole and then immediately fill it back up just to prove they did the work. And a price tag for all this pointless work? It's paid in energy, an absolutely staggering amount of energy. A single Bitcoin transaction uses literally millions of times more electricity than a simple Visa swipe. The entire network uses more power than some countries. It's mind-boggling. Let me put this in perspective for you. The electricity needed to process one single Bitcoin transaction could power an average household in India for nearly 2 years. 22 months. All of that energy, all of that environmental cost for one transaction. So we end up right back where we started, with a paradox. On one hand, you have this really clever, secure, decentralized piece of technology. But on the other hand, it's an asset with extreme wealth concentration, an ecosystem that runs on pure speculation, and a system powered by an unbelievable amount of waste. Is it a revolution, or is it a deeply flawed paradox? That's the question we'll leave you with. What do you think?